You're making more money than you ever have, but somehow your credit score still remains this mysterious number that's controlling your options. Let's make this simple. What is it? Why does it matter? And what should we focus on first? By the end of this video, you're going to know exactly what a credit score measures, how you can move that number, and how to check it the right way so you're not left guessing. And if you want a quick gut check on your overall financial condition, make sure you download my free guide, the Financially Empowered Women Checklist. The link is in the description below. It's going to show you what you're already doing right and where you need to focus on next. So let's talk about what exactly a credit score is. It is simply a number that helps lenders get a good idea of what type of credit risk you are. Are you someone that is going to pay back your loan on time every month? Are you someone that is going to pay on time most of the time, but maybe a little bit late here and there? Or are you someone that is more likely to default on your obligations? All of this is going to help the lender decide, one, if they are even going to lend you the money, and two, what interest rate they are going to charge. So why do we care what our credit score number is? Well, first, I want you to know that the credit score range goes from 350 to 850, and the higher the number, the better. Anything from 740 to 799 is very good, and anything over 800 is excellent. So you really want to try to make sure you're in one of those two categories. As I mentioned before, your credit score is going to help determine what interest rate a lender is going to give you. So the higher your credit score, the lower the interest rate because you are less of a risk. And that means it's going to save you money. Because who wants to be spending their money on interest? Not me. I want to take that money and go on a trip, maybe pay down some other debt that I have, or max out my retirement accounts. So have you checked your credit score in the last 90 days? Let me know in the comments below. Now let's get into the meat and potatoes of what exactly this number is. It's made up of multiple different criteria, so let's walk through it one by one. Number one is your payment history. So this makes up 35% of your score. So this one is really important and something that you want to focus on. It's also something that's entirely in your control because all it means is that you are paying your bills on time. Now, you don't necessarily have to be paying off your entire balance, say for your credit cards, right? But you're paying at least the minimum payment due by the due date. Now, life gets in the way sometimes, and we'll forget to make a payment. It's not because we were doing it on purpose or that we don't have the money in our account. We simply forgot. So I want to make sure that that does not happen to you because I don't want you to get charged with late fees and I don't want it to affect your credit score. So the best thing for you to do is to automate everything. You can automate all of your payments through the lender or through your online banking. If for a credit card, for example, you can go on, you can select each month if you want to have your minimum balance or pay in full or a different amount. You set the date each month and it is good to go. It will automatically pay each month until you tell it not to. So it's worth taking a few minutes and setting up all of that automation because it's going to save you a lot of headaches down the road. The next factor is amount owed, and this is 30% of your score. So this is another big one. This is looking at how much you owe compared to your available credit. So if you have a credit card with a $5,000 balance and a $10,000 credit limit, then your credit utilization rate is 50% for that card. So what your credit score is doing is it's adding up all of those balances and then all of the available credit and taking 1%. So if you're trying to get your credit score into that highest level, you want to try to aim for that percentage to be around 10%. But really, anything 30% and below, you're doing great. The next thing it's looking at is the length of your credit history, and this is making up 15% of your score. The more time you have showing that you have been able to pay back your debt on time, the better. It makes you look more trustworthy. However, this is not something that you can change really quickly, so I want to encourage you to start building up your credit as soon as possible. And even if you've had a loan in the past that has been paid off, say a car loan, for example, that still counts even though you're not actively paying that each month. It actually stays on your credit report for about 10 years. The next thing is your credit mix, and this is making up 10% of your score. So this is looking at what type of debt do you have? Do you have a mix? Do you have some revolving debt such as credit cards? Do you have term loans such as student loans, a mortgage, a car payment? It's giving the lender an idea that you are responsible for multiple different types of loans. In the short term, you can charge on your credit card and pay it right back down. And then for longer term loans, you're able to stay consistent for years at a time and pay every single month like you're supposed to. Now, since this only makes up 10% of your score, I wouldn't go crazy here and start opening up new accounts just to have that type of credit on your report. It will happen naturally over time as you go through different seasons of your life. So the final piece is new credit, and this is 10% of your score. So this is looking at how recently you've opened up new accounts. Every time you apply for credit, they are going to pull your credit report, and that is a ding on your credit score. Now, if you're doing one or two here or there, it's not going to make much of a difference and it's going to bounce right back up. But if you have a lot of them at once, that's when it can really make a difference. It's alerting a potential lender like, hey, this person seems like they all of a sudden need a lot of available credit. Is something going on? Are they having a cash flow problem? Are they going to have a problem paying me back if I lend them money now? Now, if you're looking to make a big purchase, such as purchasing a house or a car, you definitely want to shop around for the best rate. And because that's a good idea, you're not penalized for that. As long as all of those inquiries are within a couple weeks of each other, the system knows that and counts that as only one inquiry, so you're not penalized. So definitely make sure that you are doing your research and getting the best rate that you can for those larger dollar amount loans. So let's talk about how to actually check your credit. Your credit score is very readily available and easy to see. If you have a credit card, most times you'll actually see it on your statement. They'll give it to you each month. Now, your credit report, which is all the information we just talked about that goes into your credit score, you can get from annualcreditreport.com is a good source to get your free report once a year. You can also go to any of the credit agencies to get your report as well. And with this report, you want to make sure that you are checking it periodically, even more frequently if you know that you're going to be making a bigger purchase. Say you want to be buying a house within the next year. You maybe want to be checking your report quarterly just to make sure that it looks correct. You want to make sure that all of the open accounts on there are actually ones you have opened, that there's no fraud, that the information is correct. It's not saying that you have late payments when you never did. So you're able to stay on top of it and make those corrections if needed. And if you want a quick way to get organized with your finances, make sure you download my Financially Empowered Women Checklist. It's going to show you what you're already doing well and what to focus on next so your finances feel less messy and confusing. The link is in the description below. If this video is helpful, please give it a like and make sure you subscribe so you don't miss my next one.